Let's have a quick look at what's happening to US markets. They are starting their week because, of course, they were closed yesterday for the Independence Day celebrations. The S&P down 0.9%, the Nasdaq off 1.25%, and the Dow Jones also trading 0.9% in the red. That's not surprising given what happened to European markets yesterday. Today, the FTSE 100 actually managing to gain a little, up a third of a percent, but the CAC and the DAX both coming under significant pressure, as did we. And still with me in studio are Greg Katzenellenbogen and Gerbrand Smit. There is a question on Astoria. Could the panel comment on its poor share price performance?
Well, it's related to the currency. You know, it's the underlying investments are offshore. There is a small amount of private equity in there, but generally it's the blue chip, large cap stocks. And if you've been on another planet, then you wouldn't have known that the markets have been taking a tumble globally, and the rand has improved significantly. So a strengthening rand is not good for Astoria.
Gerbrand? And I suppose it's not just a currency issue. Maybe people are thinking, well, you know, what are they buying that I couldn't get in a tracker fund, for example? So, and there's a management fee involved there.
Yeah, look, they got a good track record over the last 3 and 5 years in South Africa. So they're not bad managers from that point of view. But I think it was just a bit of sector rotation from the beginning of the year. And as Greg said, the currency has gone against them. These large cap, well-run operations were a bit expensive. They're coming back a little bit, and the currency is certainly strengthened over the time. So it's too short a period to come and judge a new vehicle like that over a 6 months period. It's something you should actually judge over a 5 to 7 year period at least.
Okay.
South Africans are so used to getting a benefit of a weaker currency, then when it turns against us, we're not quite sure how to handle it.
No, we don't know. Yeah. I don't think we know what to do now. How can we possibly have a stronger rand, damn it? I forgot to go back to the question on Trencor, and the question was whether or not it's a value trap, as a large chunk of its worth is in New York Stock Exchange listed Textainer Group.
Yeah, well, look, I don't know why it would be. It's in the transport business. It's they rent out all these containers, and you know, if the dollar is strong, it should be good for the company. But I don't follow it that closely. Maybe Gerbrand can chat about it.
I mean, the viewer did mention their concerns about global GDP growth, and whether this would then be sensitive to that.
Look, I think Grindrod is another example. These things come under pressure. Global trade's under pressure. So probably a nice buying opportunity, longer term wise, if you think trade will recover over the next few years. It certainly was one of the beneficiaries of a weaker currency over the last while as well. And it shot up to about 80 Rand a share. And it's at 37. I know there's a lot of fund managers out there that's holding it in their portfolios. But yes, it depends on what your view is. If you think the currency is going to strengthen further, you don't want to hold it. If you think trade on a global front is going to struggle for quite some time, you probably don't want to hold it as well. But it all depends on what your views on those.
Okay. Truist looks like the cheapest entry in the retail sector, while Clicks looks expensive and like a short. What do you think?
Well, we like Truist very much. It's in our house view portfolio. So it's a good company, well managed. It's got some offshore operations now that have worked against it in the last couple of weeks, but we think that's overdone, and the share price has come down quite a lot. But that's relative to Clicks. That's been our choice.
And Clicks, I mean, would you short it? Because Clicks has been an incredibly strong performer over the last couple of years, and borne out by the kind of results that they were producing.
In this market, you have to be careful about shorting stocks, because you just get a change in sentiment, and people are massively short right across the market, and the short squeeze could probably put you out of business. So be very careful in shorting in a market like this.
Okay. Gerbrand, your thoughts on either of those companies?
Yeah, well, we hold Truist as well. I think it's been punished too much for its European or UK exposure that it recently acquired. It's actually written off that whole piece of business. It's a brilliant run company. In the last sets of numbers, it was actually growing the diluted headline earnings per share by about 20%. It's trading at about 12.5 PE for this year. We think it's one of the cheapest retailer in South Africa. With Fushini, I think it's not too far off as well. Clicks are more expensive. Well-run company, and I won't short a company that well run. Although it is expensive, I won't hold a share.
And presumably, Clicks is the kind of company that's going to benefit when you're not spending money on anything else, but you might buy a nice body lotion or something because the economy is so tough.
It's defensive in a way.
Defensive. Okay. PSG looks quite fully priced with Zeda Capitec struggling. This is clearly a short seller. Would you short it together with Coronation and then go long of gold?
Well, which will short both them or Coronation? Well, Gerbrand, you can...
No, I don't think I will short
Coronation
any of those
PSG.
two. They're well-run operations. If you look at breaking down PSG, I would rather hold the Zeda shares at the moment, just from a valuation point of view. It's trading at about, I think, a 38% discount to its underlying, where you had Brait earlier on the same price. It's trading, and it's changing their fee structure to much more what we like. And then Capitec, we don't think is expensive. Capitec is a disruptive kind of company. It's taking market share from all the other players in the market, trading at a 20 PE, which looks expensive because the other banks are trading at 8 and 9s, but they're still growing at 25%. So I think that's okay. It's not as cheap as it was 180 2 or 3 years back. It's now 600 Rand a share. But it's a quality company. But if you look at the holding company itself, I think you can buy some of the parts cheaper than I would buy PSG, but I won't short it.
Okay.
Coronation was 110 Rand. It's now trading at 64 something a few years later. It's a well-run operation. Yes, they're struggling on generating alpha at this stage. Any fund manager has 1 or 2 years that they're down, and it's certainly not the time to sell them when they're down.
Greg, your thoughts on Coronation and also maybe long gold? We did discuss it a little bit at the
chat
beginning
better
of the show.
about gold. I think that if all the negativity in the markets and what you were saying about Italian banks, if that does come to pass and we get a knock-on effect, then I think that we will see the gold price soar because it is a safe haven. And at the moment, people are looking for safe havens. You can see they only have to look at the US dollar, Japanese yen cross, and you will see that it's approaching 100, and so money is flowing into safe havens. Gold, I think, will be a beneficiary of that as well. Just on the other financials, if it's correct, and and I think the European Central Bank today told the Italian bank Monte dei Paschi, which is the oldest bank in the world, they need to get rid of 14.5 billion euros of bad loans on their books. I don't know how they're going to do that because Italian banks are suffering from a lack of capital. And if those banks are not recapitalized, it could have a knock-on effect on financial companies around the world, and our banks won't escape that, despite the fact that it might be unfair. But that is a concern. But I do believe that we will see over the next 12 months a much higher gold price than where it is now. And
then if you were to take advantage of that, would you buy something like New Gold? If you're
I think New Gold is probably the easiest. If you're really adventurous, then you can take the leverage play by buying gold shares themselves, which are quite highly leveraged to the gold price itself.
Okay. The panel's view on construction shares on a 3-year view.
They're cheap. I just
and
don't
they've
know
been
what
cheap for a very, very long time.
So I don't know what the catalyst will be. So probably a lot of homework, and there is a few gems out there that's been doing okay. Wilson Bailey comes to mind, Raubex comes to mind, etc. But yes, there's going to be some value traps in there. And you should probably not employ a lot of capital into that specific sector as yet.
Okay, that's construction material, so that probably refers to what Afromats and the PPCs and stuff. So the construction index is slightly different, I would imagine.
But you saw yesterday that, we lost more jobs in South Africa. So as Gerbrand said, where's the catalyst? And I can't see if that trend persists, we're very likely to get a downgrade. So I cannot see what can lift the construction industry in the medium term. We have enough stadia.
Yes. Although not enough roads and infrastructure, so that would be nice. Is DB Trackers, as sold in the JSE, perfectly safe as far as the solvency of the issuer is concerned, and the issuer being Deutsche Bank?
Well, if you'd like to, it is Europe's, everyone is writing Deutsche Bank off, but I believe the German government will never let anything happen to a bank the size of Deutsche. It's Europe's flagship, I think.
And of course, they would be breaking those ECB rules because the whole bail-in rules
Well,
mean
that's
you
a whole thing. But I don't believe there is any concern if you hold a Deutsche Bank ETF on the JSE. I don't think
there's
there
underlying share prices underneath that, so they're not underwriting anything. They're just weighting them daily.
And they make you a market, so
yeah.
you can always trade in those, and it doesn't matter what size you want to trade in.
So underlying, there's still a Microsoft share or something in that, and that's the risk in them.
There's
okay, so as far as the issuer is concerned, you don't see
as far as the
risk.
issue is concerned, there's absolutely no risk to anyone holding that from Deutsche Bank size. That the only risk you have is if the shares go down.
Okay. Before we get to stock picks, I want to ask about famous brands because it went up yesterday and it was resilient in today's market, which was really iffy. And I was wondering what either of you think about it as pick at the moment, or if it's too expensive.
It looks pretty full in terms of price. It's done fantastically well, and it's quite defensive. And they've taken on a lot of new brands and brands that we might not household names yet, but it's a very well run company. And so I think in this market, if you're looking for something to you can't go wrong with takeaways.
Gerbrand, any?
Yeah, my preference in that market at the moment, I think Spur is much better priced at the moment, and they got similar growth rates to what Famous Brand has in similar markets, etc. But yeah, Kevin Hedderwick has done a brilliant job in that business, but it is pricey. We think it's going to go sideways for quite some time, so my preference would be Spur in that space.
Okay. Getting to stock picks this evening. Greg, what's yours?
Yeah, mine is Investec PLC. The share's taken an absolute hammering. It's been, if you've seen what's happened, if you had to put the share prices up there of things like Royal Bank of Scotland or Barclays, it would be more of a vomiting camel, as you see there. But I think that Investec is a good business. It's a specialist bank, whereas every bank has been targeted. Yes, I understand the fact that about Brexit and that, but at the moment, nobody knows what the final effects will be. And I believe that the UK and Europe have to work out a compromise. So I think at 85 Rand, Investec is a good buy in the short term.
And Gerbrand, how about you?
Yeah, similar. We're going into properties,
yes,
which is also taken a hammering. It was, before Brexit, cheap already. It was trading at a 0.75 price to book, which tells you 25% discount to what the property values were on their books. They're now at a 0.6, so 40% discount. So similar levels in 2008 and previous crashes. So we think it's a massive buying opportunity. If you think it should add another 40 just to get to where it was, it's probably about 50 or 60% upside from where we are at the moment.
Okay.
And yeah, long-term wise, this thing will go over and the properties will do well again. And they've just recently announced that they're purchasing another property company, and they're going to own the whole business for a discount. So, yeah,
so you're
like
not overly I suppose, worried. We have to leave it there. Greg, Gerbrand, thanks very much for joining us this evening. Gerbrand Smit is from NeFG, and Greg Katzenellenbogen is from Sanlam Private Investments.